90% of us that trade in crypto are having tax issues. So there's a lot of different cost-based models that you can use that will significantly give you tax benefits. Nothing as liquid as this market. We always talk about the gains. We always talk about the 100x bags. We always talk about all that stuff in crypto. We always go to the moon, and there's nothing wrong with that. And I'm with it. That's part of the game. We want our gains, but also we need to learn how to take a loss. No one's talking about that. We talk about that through taxes, through tax loss harvesting.
Perfect time to learn about taking a loss with the market just dumping and going down right now.
Well, yeah, market's completely dumping, but we love it. We do not sweat this. We do not worry about it. We simply average down those positions and we take those losses against our future taxes because it always comes back. You got to look at history. While other people are crying about it, we're laughing. We're excited for it. We know that this is going to be an opportunity for us to bank some losses for future gains.
Hey, Sohail here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, thanks for tuning into another episode of the Teach Me DeFi podcast. This one will be primarily about taxes, everyone's favorite topic, especially when you're in crypto. No, I think obviously it's an important topic and one where there's a lot of confusion, a lot of different opinions going around. So I think it makes sense to try and bring some clarity into it. And for this today, we got Nick from Count on Sheep on the show. Hi, mate.
Hey, how you doing? Thanks for having me. We'll try not to make this boring for your viewers, I promise.
Yeah. I mean, taxes is always a tricky topic, but
100%.
I think there are some fun and interesting nuggets, especially with your background. Actually, maybe we start there. Just how you got into it all. I know you have a digital marketing background, entrepreneurship and all that. Just tell me all about that for starters.
For sure. Yeah. I mean, it's funny. I kind of fell into, digital accounting and, it was kind of almost by mistake. And my background is in digital marketing. I had a company called Power Digital Marketing here in San Diego, and we grew to be one of the larger marketing firms here in the US. And we exited in 2019 as well as 2022 and had a really good run with that company. And it was, running ever since 2012. So, through that experience, I learned a lot. I met a lot of people. One of my most fascinating clients, I always say, is Marco from Genesis Mining, one of the first mining companies out there. So that's really when crypto came on my radar specifically. And I started collecting and we were doing, his marketing for Genesis. So, it was a really interesting time. And that was like, circa 2016 or so. And really started collecting, Bitcoin, Ethereum, and all sorts of altcoins. And, wrote it up and down through multiple cycles and learned a lot through that. And ultimately, we arrived in 2021 and I had a big tax liability. And I was trying to figure it out. And I had some of the best CPAs on this planet, names that you would know if you are in business. They're large accounting firms, and they were both based out of the East Coast and on the West Coast of the U.S. And I sent both of these teams to go and do my taxes for me. I said, figure out my crypto, and they all came back with different numbers, and that was a huge problem. I was paying them way too much money per hour, and to have different numbers, I was very confused. And then they started asking me to do the work. They started saying, hey, Nick, can you go in and do this? Or can you help me find that? And can you? Right. And I said, absolutely not. I'm paying you way too much money. You guys need to figure this out. It shouldn't be that hard. And they basically said, well, it is that hard. And I said, okay. So I had to get rid of them for that specific endeavor with the crypto. And I ended up doing my own homework. And I started looking for, people helping me with my taxes in crypto. And then I started, nothing was coming up. And then I was looking for people that would do like bookkeeping for crypto. And finally I found someone, and it was this gal that was in the Midwest. She was like, we did a video call. She was in her basement during like COVID. And I was just like, okay, but she was ex Ernst & Young. which was very interesting. So one of the big four, if you will. So ended up talking with her. I liked her, but I was very reluctant to show her my high seven figure, crypto account. So I had to
Yeah.
open up the kimono to this person that's a complete stranger. And I was just like, oh man, let's just see how this goes. But I was very reluctant, right? It wasn't very a professional setting or anything of that nature. And within a weekend, everything was set straight, and she was able to take all of my trades through all my exchanges, through all of my swaps, through all everything I've done in a matter of 7-8 years. She was able to stitch it all back together, put it in one place for me where I can visualize it, and then also give me the tax benefits I need. The last time when I left, they were saying that from the CPAs I was talking to, they said I owed about $1.2 million. When I was done using her service, I had a tax loss of 996K
All
that I could
right.
write against my future earnings. So,
Right.
which I needed because I just sold my company. So it was just the most amazing. It's like, a delta of like $2 million, that I basically saved. So that's when the light bulb went off. And I decided that I wanted to figure this out for the crypto world.
That's crazy. Just a discrepancy, right? That just shows you how important of a topic it is, and it makes sense to discuss it.
Yeah.
So, did she get involved? So, what was the next step then? Because then you got a bit
Yeah.
into the taxation part, but now you're pretty much fully into it, right? So, did
Right.
you? Yeah, tell me about that.
So to your point, yeah, no, I moved away from that service and I started my own. So I basically took an arm of what company that I own that runs multiple companies and invests alongside them, and I decided to start investing into the accounting for crypto. And we basically put this in the incubation R&D stage for about 18 months, and I hired big four accountants to come on board. And I said, you guys need to figure this out. We put them in a room with a whiteboard and some computers. And we said, we're going to figure this out, and we're going to come up with the best standard accounting practices for the digital asset reconciliation, is what we call it. And we're going to figure this out, and we're going to have the best standard processes, hopefully in the world. And we did that for 18 months. We started doing a lot of different clients and a lot of different people throughout that period to test this on, and we kept getting just phenomenal results. So we knew we had something. And since this was just an investment for that I had, where I give multiple investments nowadays, this one I actually was excited about, and this one I actually came on board with. So I
Mm.
started working with the team of former Big Four accountants and CPAs on my team, and then took up as the CEO of this and found this company.
Right. Okay. Okay. So before we get into what you guys are doing, so perhaps we start with the basics of crypto taxation, right?
Yeah.
Perhaps for those new to crypto as well, or for those that aren't that well versed in that part of it yet, can you explain some of the basics of how crypto is taxed?
Yeah, let's just talk about a quick, we can talk about short-term, long-term capital gains.
Right.
That's typically how it's taxed around the world. If you're, basically taking it as income, or you're doing sales and you're doing transactional stuff, it could be ordinary income. But the more important piece is kind of what's the big issue with crypto tax? Why is it so difficult? Why is it different than any other kind of tax? Why would I need someone other than my CPA to do it? And I think the best way to do it is Coinbase did a great job of explaining this on their website. And when they talk about, they'll give at the end of the year, Coinbase will give you a 1099, and and they will tell you basically what your trades were and what you owe. But it also has this part where it says, well, if you've done any of these things, our 1099 is not accurate, and it gives you this warning. So they're covering themselves. And it basically says, hey, if you've moved your coins off the exchange in any shape or
Yeah.
form, you moved into cold storage, you've moved it to a different wallet,
Right.
you've moved it to a different exchange, it basically says then our information is not accurate.
Yeah.
And that's a very interesting thing. So, how many of us do that? Almost all of us. And a lot of us use
Yeah.
cold storage. We should be, protecting our own keys. A lot of us use multiple exchanges, because you want to get at different coins and different opportunities. So it's saying when you're
Mhm.
doing this, that it's no longer, the accurate numbers that you should be getting for your taxes. So That's where we come in. And to give you the viewers a really good example and a really easy one is, if you bought on Coinbase and then you transferred that, that Bitcoin or whatever you bought to Binance, for instance, it basically sees that, it establishes, that you bought it, here on Coinbase. But then instead of showing that you sent it to your other wallet on Binance, which is a
Mhm.
non-taxable event, it shows that it basically makes it look as though you sold it. That's the default.
Mm.
So then that becomes a taxable event, and then it shows up on Binance, and Binance says, "Oh, now we just established a new coin here in Bitcoin, and now we have a new tax basis going." So now every time you're switching, and you're
Mm.
trading coins from exchange to exchange, you could potentially be, double, tripling, quadrupling the taxes you owe, because the default
Mm.
setting is always to show that you sold. Instead, what you should be doing is wallet matching. So you should say, hey, I have this wallet here. I also own this wallet here. And I also own this wallet on this exchange. And this is actually my cold storage wallet. And you have to wallet map everything to make sure that you're telling that, again, the specific, linear movement of your, for your taxes. And, those are
Right.
non-taxable events. So that's a very important thing. But this is one of the basics that we're seeing. So basically, everyone we see, if you're not just staying on one exchange, and you're not moving any money off of it, then your 1099 is probably correct, and you have a pretty simple tax return. Other than that, the other, call it 90% of us that trade in crypto
Yeah.
are having tax issues for not doing these
Right.
exercises.
Yeah, interesting. Yeah, in that example, so clearly you're just moving it, you're not selling it, but it takes it
Right.
as default because it's being moved outside the exchange. It's just saying, "Oh, that's a sale," and you don't want that, right?
Yeah.
And like you say, it's like almost like the complexity that you run into is almost that big that you don't really that it kind of prevents you from doing anything else. You're like, oh, I'll just keep it on Coinbase, like I won't do
Right.
anything else because it
Right.
gets so complicated.
Exactly, but to really navigate in our world, we use multiple exchanges, we
Yeah.
use cold storage, we use these different mechanisms, and it's important. And the one thing that's really important too, or that I should mention, is when you establish your cost basis, when you buy into a certain coin at a certain time, that's your cost basis, and that's what you paid for it. And then that goes along, and then you see if it goes up and down. So with that said, on the exchanges, they're not sharing your cost basis with one another. So you're not,
Yeah.
Coinbase does not have to share your cost basis with what you bought that Bitcoin for, and when you send it over to Binance, they're just not going to do it. And I don't really know why. I have my ideas. As a marketer, I would say they don't want to share. They're not made. They don't have to. There's no international law that's making us
Mm.
share the cost basis yet. And I think that's a potential loophole, and I think that will be closed at some point. But for now, that makes the taxes extremely hard. So, and probably why Binance and they wouldn't want to share information anyways, because they'd see the fees and everything associated with what you bought, because that's all rolled up into your cost basis. And if
Right.
Binance saw that Coinbase charged you this for this Bitcoin, I would immediately shoot you back with an email saying, from Binance saying, hey, you paid too much at Coinbase. You need to only shop with us from here on out. You only use our
Right.
exchange.
Right.
So I think, that they like the fact that they're not doing it. So while they stay very decentralized from one another, it causes issue with the taxes. So you need someone to go back and stitch that all together.
Right. Let me double click on that part. So when you say cost basis, just for people if they don't know. So basically, let's say you bought Bitcoin on Coinbase on, January 1st, and then you have the purchase price from that date, right? And then
Yes,
once you sell it in the future, you would compare the sales
the delta
price, so
between
to
the
say.
two.
Right, right.
Yeah.
So, but if you move it during that period to Binance, let's say on, I don't know, March 1st,
Yes.
Binance will obviously kind of assume this is sort of like this day is now your purchase price and your cost basis, and then depending on the price, you might owe a much larger tax payment than you actually do, right?
Right. And that's what we're seeing, and that's where people are losing out. Another way, we see people losing a lot of money is through cost basis modeling, So you have different models that, tax that, governments use. And, one is first in, first out, for accounting method. And that's like a default method. So, if you were lucky enough to buy Bitcoin at 300 and now, and it was at, its all time high at 73 the other day, that's a large spread that you have to, if you sell it at that point, you're paying
Yeah.
a lot of taxes, right? But what happens if you were last in, first out? So what happens if you bought Bitcoin at 65K and it was at 73K? Now you only have that $8,000 spread that you're paying taxes on. So
Right.
you'd want to associate that last in, first out method instead. So there's a lot of different
Right.
cost-based models that you can use that will significantly give you tax benefits. And you can choose throughout each year which cost-based model works for you best. And people don't know that. A lot of people don't know that. And that basically will help you get the best savings possible. But then here's the other caveat to that is everything defaults to first in, first out. And that is usually the
Right.
worst model you can have. So, that's another way that the exchanges are just kind of playing, the default method to give, the government the best taxes possible. Your money, your taxes are going
Right.
in at the highest rate possible. So having someone go through once again, doing the digital asset reconciliation and figuring that out and applying the best cost basis model to your specific portfolio. And mind you, your portfolio is like a fingerprint. It is unique to you. I do not see one portfolio that matches the other same portfolio
Mm.
ever. So to have, it really needs to be treated like that. And then that's really how we unlock the savings for taxes.
Mm. To break that apart again, so let's say you've been buying Bitcoin over the years, even maybe, or months, and then you're selling some of that Bitcoin, and you're saying basically now, okay, so now the question is like, what's the cost basis of this Bitcoin on which you have to see how high your gain or loss is, and then your option would be to say, okay, you are selling, so to say, the first Bitcoin, first in, first out. You
Right.
are selling your very first Bitcoin, so to whatever price you bought the very first ones, first, and then you go to the
Yes.
next ones, next ones, or you go last in, first out, which would be the most recent purchase to whatever purchase price that was, is now
Right.
the Bitcoin you're selling, right?
Yeah, and that's a great way to say it. And I think another one that we should also mention is
Yeah.
specific ID. And specific ID really allows you to look at your portfolio individually and choose the ones that have the best. You can get rid of ones, as long as you record it, strategically. You can get rid of the ones that have the least, tax um,
Right.
burden to yourself. So that's a really interesting one as well. So, when you work with a firm like ours, for instance, we're able to do that, work for you, and we can actually choose, the ones that, that you should get rid of this first, and we should, these should be taxed
Mm.
first because they're taxed at the lowest, and then, as you start getting down here, you'll get taxed higher. So, this
Right.
specific idea is a very interesting cost-based model, and allows you to use a multitude of different models to formulate, your taxes, and it is amazing, and so far they haven't had any regulatory around choosing one cost basis over the other. So the fact that spec ID is still in play is going to save everyone a tremendous amount of taxes from here to the future
Interesting.
until they close that out.
Right. I didn't even know about that one. Is that something that you would say specific to the US?
No, that model can be applied in multiple countries. So that's yeah. And some
Right.
of them don't, mind you. Some of them will have you can only use this one, and they've really put their foot down on a few. But there are still a multitude of countries that will allow for that.
Okay. One of the advantages, because you were saying last in, first out could be better in many cases. One of the advantages that I've seen in Germany for first in, first out is that you mentioned short term and long term tax rates. So basically, in
Right,
Germany, if you hold crypto longer than a year before you sell it, it's actually tax free in most cases.
which is amazing.
Um,
Good job,
yeah,
Germany. Yeah.
yeah, that's a nice one here. Um, is there anything like that in the US, or is there a difference in tax rate? What does it look like?
Yeah, I mean, our tax rate is quite. If you hold it, so basically, short term is basically what our ordinary income tax rates are, which are typically higher, and then our long term, the federal is about 20% or something on long term capital gain.
Mm.
So we definitely try and hold things, and we want to work with our clients too to be strategic and put plans together. Like perhaps you should have a plan to hold your Bitcoin longer if you believe in Bitcoin, and and you can trade these other coins more strategically. So, in more short periods of time rather. So, but really we're looking for, if you can hold it long term, in America, we really try to get everybody to hold it for a year, if you
Mm,
can, but it really depends on what your business is. And, we have people that are doing bot trading. They're just doing, micro trades and things of that
right.
nature. And there's, thousands, if not tens of thousands of transactions going through. So we understand that. And that first in, first out model works for that, because it's just happening in such quick sequence. But typically you want to hang on for those long-term caps.
Mm. What's the cutoff? Is it 1 year for that?
It's 1 year. Yep.
Right. Okay.
Yeah.
Okay. Yeah, it's interesting because some of these rules and regulations, they kind of disincentivize being active on chain doing things, right? Because they
Right.
basically, which
Why do
is
you
not
think that
really
is?
helpful.
Yeah. I
You
think that
tell
kind of
me.
slows progress, right?
Yeah,
Yeah.
it
I
really
mean,
does.
it's a game that you kind of have to play, or at least be thoughtful of. And I could also say, from someone that has become wealthy through crypto, and through my last business. Wealthy people, we think a little bit differently. And I should put this out to everybody, because I think everybody can learn from this. Is we really look at our taxes in a meaningful way. And that's usually where the most of our wealth is taken away at this point. After you've unmasked the wealth, you have to look to protect it, and you want the best tax incentives possible.
Hmm.
So, I would really want to tell your viewers that, how to take a loss. And we always talk about the gains. We always talk about
Yeah,
the 100x bags. We always talk about all that
the
stuff in
God
crypto.
candle.
We always go to the moon, and there's nothing wrong with that. And
Yeah,
I'm with it. Like, that's part of the game. And we want our gains, and we want to multiply money in a meaningful way. But also, we need to learn how to take a loss, and that's, no one's talking about that. And we
yeah,
talk about that through taxes, through tax loss harvesting. So if you have a coin that you invested in that's completely going down, it's all right for you to sell that, because you're banking that loss for your taxes against a future gain. So when you have these gains in these other coins, and you have losses in these other ones, you can actually offset those taxes. It's huge. It's one of the best things we can do. I mean, there's only a few other plays that we can make, and maybe in real estate and some other ones that can have that kind of advantage, but nothing as liquid as this market, in crypto and digital
yeah.
assets. So, very important to bring that up to the viewers. Tax loss harvesting is one of the best things you can do. We just saw Bitcoin just plummet the other day. But
Yeah,
hey, if you bought at 70, why not sell at 50? And I'm not giving you
yeah,
investment advice here. I'm just saying, you could bank those losses all the way down to 50 grand. If you bought at 70, that's 50. Now there's a $20,000 loss that you just took, and
yeah,
now you're bought in at 50 now. And now, I'm assuming it's going to go back up like it always has. So,
yeah,
don't be afraid to bank these losses, and then you can choose whether or not you want to buy back in. Here in the U.S. currently, it's not, Bitcoin or any of the cryptos. They're not considered securities, so they don't provide that wash sale rule at the time, according to Google and anywhere else you would read. But yeah, you have to be careful about that. The IRS has also come out here in the U.S. and said, hey, if you're intentionally doing wash trades, to just manipulate taxes, we could take issue with that. So
right.
it depends on where you stand on it. But currently you could choose to sell and buy back before a 30-day window, and at least here in the U.S. So, but I think other countries have made some more moves on that quicker to close that loophole. So we'll see where that goes. But that still doesn't change the narrative that taking losses is a good thing. If you're losing on a coin, feel free to sell out. And
Yeah,
then focus on the next coin that has some better metrics for you.
right. Perfect time to learn about taking a loss with the market just dumping and going
Oh,
down right now. So,
well, yeah, and the market's completely dumping, but the wealthy,
yeah,
we love it. We do not sweat this. We do not worry about it. We simply average down those positions, and we take those
right.
losses against our future taxes, because it
Yeah,
always comes back. You got to look at history. So it's very important that people look at these times, and while other people are crying about it, we're laughing, and we think it's we're excited for it. We know that this is going to be an opportunity for us to bank some losses for future gains.
right. Um, Have you seen like some common mistakes perhaps that people make when reporting crypto on their taxes? You already mentioned a few, but is there anything
Yeah,
else that sticks out to you?
one of the biggest ones is, are, and we work in tandem with CPAs. I should point this out before I answer this. Like we do a lot of the bookkeeping behind the scenes. So if you have a CPA in any country that you're in, we always work with them. So we'll reconcile all the books, we'll do all the crypto, we'll do all the tax savings, and we'll do all your forms for your local government agency. And then we'll pass them back to your CPA. So you get to keep
Mm.
them. So we have nothing bad to say. But when you're a CPA and the monetary system is starting to change, and you've always worked in fiat, you're gonna have issues. So that's why I bring up those 1099s. If you just take out your 1099s from all your exchanges and you give them to your CPA, he's going to be like, "Sure, I'll file your crypto taxes, no
Yeah,
problem.
yeah,
I'll
yeah.
take care of it." But then you're taking massive losses, like massive,
Many people are
and
still clueless to this, like you said.
oh
They
yeah,
don't
and
know
the
yet.
CPAs, are most of them don't know either that they're doing this. Some
Yeah,
of them do. Some of them are like, I don't know how to reconcile crypto, and I'm not going to, and that's not part of our business model. And
exactly.
we need to
Yeah.
file your taxes to keep you compliant, and we're just going to do it, and it's going to cost you a lot. Whereas,
Mm,
so I mean, that's one of the things I want to push the hardest is, it's good to work with a company that does the digital asset reconciliation like us, and that's not just a plug for us. That's anyone that does what we do. And there's very few people that are doing it right now. But,
mm,
with that said, you want people that can do this and then work in tandem with your CPA. Because if they're just going to file your 1099s here, like in the US, and, all at once, it's going to be a massive loss. You could have kept a lot of that money in your pocket. So I really
mm.
want to, run that one down and you let your viewership know.
Fair enough. Yeah. So there's also these tracking apps, right? So obviously, one thing that sticks out to me right now is basically labeling stuff, right? So you
Yes,
understand what is that transaction. Is it a trade? Are you sending it to a different wallet of yours? Are you
correct.
selling? Are you receiving staking yield on a transaction right now, or something like
Yeah,
that? So it appears to be important to kind of like track what you do, your activity, and to label it correctly, which can be a little annoying and a lot of
yeah,
grunt work. So there's also these so how basically the question is how to go about tracking your activity, right? There's some like general portfolio tracking apps,
right.
but there's also some tax focused tracking apps. Two that come to my mind are coin tracking and blockpit. I'm not sure
Yes,
how international they are because they're from Germany, but they also help, like you said, to track your cost basis. They do that in the
right.
background. So, would you recommend to use any of those, or do they fall short in some ways? What's the best way to go about tracking your activity?
The question is yes and no. So to your, yes, the DIY softwares unfortunately are not DIY. They're
Mm,
not do it yourself. I mean, they can be to an extent, but if when you start adding in multiple exchanges and things of that nature, their accuracy goes way down, and they
mm,
will default to first in first out. Even though they do have multiple options on them for cost basis modeling, but also once you pick a cost based model in a lot of these tracking systems, you can only use that same one for you have to start where. I should also mention, when you do your crypto taxes, you have to go back to when you started. You can't just say I want to do last
mm,
year. If you start doing 2016, you have to go to 2016 because that's where your cost basis was established, and then you need to stitch it back together. The good news is, with the right tools and the right formulas and things that we have in house, we can get that done very quickly. It's not like, a tremendous amount of work and a tremendous amount of billable hours, but that's just worth mentioning to people. But the DIY softwares, I think what I find most, they're great data aggregators. They're great at taking all your exchanges, all your wallets, everything all over the place. Like mine was just a mess, and putting them in one spot. So, I'm a big fan of them for doing that. And they all pretty much do that. They all work through different APIs. A lot of them are relatively easy. Shout out to Coin Tracker. Coinly is we're big fans of Coinly. We'll typically use Coinly.
mm,
Coin tracking, as you mentioned, is awesome because that has a lot of bells and whistles in it. So when we want to get
mm.
really detailed on someone's account, we could use that one as well. We hire, former Big Four accountants and CPAs here, and they love that one because that one they can get
Right.
real strategic with. And that's one you can apply
Interesting.
different cost basis models to different years and things like that. So a lot of levers in that one. That one I don't like as much as the UI UX. for, really tracking it and looking on your phone and stuff. It's not as sexy, if you will. But with, Coinly, on the other hand, I think they have a great UI. I think they have a lot of things being built into it. They are working on that cost-based modeling thing I'm talking about, to do different cost-based models for each specific year. I think that's really going to bring them up to speed. They do very well on NFTs. So when you're talking about just aggregating the data, I'm all about it. Definitely use one of these softwares. When it comes to reconciling the data, you can't trust all of it. It's going to make some assumptions. Some will be good for you, some will be bad. So that's where we start having issues. It does some tax loss harvesting for you. It will point out some scenarios for you. If you have someone that's a professional doing it for you, we can do a lot better than what the software can do. And then it comes with the cost basis modeling as well, where we save a ton of money. You want someone really going in there and being able to apply different models for different years and different scenarios. Once again, your portfolios are as unique as your fingerprint. So, that's the DIY software isn't really going to be able to recognize that as well.
Right.
But we do work with those partners. It's great for aggregating, and then the rest of it could use some help.
Gotcha. So in terms of the services you offer, do you focus on one specific type of crypto user, or is it, because you mentioned like you have people running bots, you have so that's like high frequency trading stuff, right? A lot of transactions
Oh yeah,
probably, but you have the typical holders, you have people who trade NFTs or buy and sell NFTs. You
right.
have DeFi users, right? So there's going to be a lot
Mining,
of mining. So
yeah.
do you cover all that, or
We
what do you do?
do. Yeah, we've done everything, which is really cool. And we've developed a lot of standard, operating procedures around them. And we're helping kind of, work, with, different agencies and things like that to really create these standards, within the accounting
Right.
for crypto, and digital assets specifically. So everything you've mentioned, we do. We've had so many fascinating clients, throughout the years. One of them worth mentioning is, for anybody doing NFTs, we had one that was an $18 million NFT portfolio, and it had, pudgy penguins to crypto punks to mutant apes to bored apes, everything you would recognize from that last bull run in terms of NFTs. And it was fascinating. And I think, this particular client only put in, he allowed us to do a case study, but, put in maybe $30,000 of his own money, and that was everything he had. And he just started trading them like baseball cards, I'll trade this for this and this for that. And he traded them to like the top NFTs at the time, all the way to $18 million, rode it all the way back down to, 879K at the end. But he was able to sell a few million on the way out. So he did relatively well, but it's just one of those stories in crypto where, you hear over and over again, where people ride it all the way up, all the way down. But it was a fascinating account. It took over 6 weeks to reconcile. It was one of the largest accounts we've ever done. And it was just fascinating, to watch people kind of swap art like that, establish cost basis, and really, create the rules for that kind of high volume NFT trading. So,
Right.
we do everything from those kind of jobs are extremely complicated to, I've done my mom's crypto taxes on Coinbase, which she has, a few Ethereum and whatnot. So
Yeah.
we help everybody. That's worth mentioning. And I should also mention that we're not just B2C. We're here to help, personal portfolios, but we also love to help B2B clients. So with Web3, mining companies, et cetera, we have a bunch of those people on our books as well. We hire Big Four accountants to do this stuff. So they're used to doing, corporate audits, a lot of these guys on my team. So, it makes sense for us to do help clean up the books for corporate as well. If you look at Sam Bankman-Fried and FTX, one of their biggest things that they couldn't believe when they started pulling into what he did and his accounting is he was using like spreadsheets and Excel just to like, manually entering things of this nature.
Yeah.
I think he had like QuickBooks, which is like way under, it's not really what you need when you're, a
Yeah.
multi-billion-dollar company. It's pretty laughable. So,
Yeah.
but they just had a big slush fund of all the stuff going there, and they had no organization. So one thing that I'll preach to any Web3 clients you have listening or things of that nature is wallet hygiene is becoming huge. And I think a lot of companies are starting to hear about this, but there's a better way to do wallet hygiene. We can actually use, well, first of all, define wallet hygiene. Wallet hygiene is just simply organizing your wallets. So just like in business, sometimes we'll have like, for my business, we'll have like an accounts receivable So anybody that's giving me a payment will pay into that at my local bank, and then that's where the money comes in. Then that will pour into like an operations account where I can pay my people, my vendors, my rent, et cetera. And then, anything left over might go into like a treasury account, a savings account, if you will. And, I can make a few points off of, saving some money on the side for, other, a rainy day, if you will, or other future operations of my company or growth strategy. So, that's just a real quick 3 bank account kind of play, but we can be
Mm.
so much more, it's so much more vast in the digital asset world. So we can actually, through wallet hygiene, we can actually have like account receivable wallets, Bitcoin, Ethereum, Solana, whatever you're taking in as, for payment. And then we can push those, we have a smart contract that sits on the bottom of that and says, hey, at 11:59 p.m. every night, I want you to empty it out of that wallet and put it into our operations account. Oh, before it goes into our operations account, these wallets, I want you to push, 20% of that into, our treasury account where we can do some yield farming, or we can do some staking, or we can do, so we can actually
Mm.
develop some very, high tech kind of plays with cryptocurrency and the accounting, and plus it's bucketing them in all these different manners. So if something goes where it's not supposed to go, as the accountants, we know right away, and it
Mm.
throws a flag on it. So, I mean, the automation of accounting through wallet hygiene is fantastic. No one's talking about it. We have our
Yeah.
own Web3 developer that does these for us. So we won't just map it for you. We can actually develop these for you.
Mm.
And it cuts the amount of, billable hours that we have by up to 70%. So we're almost putting ourselves out of business by doing this. But,
Right.
it's about efficiency. It's about the future of currency. And yeah, and digital assets. So I really want to, touch on that last thing. The B2B side is something that we really pride ourselves on, and it's a phenomenal way that we can set up these wallets. So you have the visibility, so you have the security, and you have the operational accounting in place that really makes sense for your company.
Right. Right. Yeah, I think that that one is a really interesting one because, yeah, obviously you have a lot of companies operating in this space, and if you start using multiple wallets, it can get quite confusing. So I think wallet hygiene is the right word for it as well. If you try and have it like clean, this wallet is for this wallet is for that, and then even have perhaps programmatic things between them with smart wallets, that makes things more streamlined. Yeah.
100%. And I can't think of too many use cases for smart contracts that are better than that. It
Yeah.
really is like working with wallets and getting wallets to speak to one another in a meaningful way that, and communicate with each other in a way that, you want to run your business financially.
Yeah.
So, and it's a fun exercise. We go through it with a lot of CEOs, CFOs, and operating people at different Web3 companies. And it's always fascinating to build these things out, and then we can always keep building on them as we go. So
Yeah.
super fun, and just makes things extremely efficient. The accounting piece just makes it, going from one of the hardest things to do with a Web3
Yeah.
coming to one of the easiest,
Right.
and we can do that for
What's your
any country. Yeah, it's agnostic to any country in the world.
yeah. What's your take on the regulatory environment at the moment? I know in the US it's been a big
Yeah.
topic with the SEC and Gary Gensler, and no clear guidelines and all that. So is there any recent regulatory changes, or do you see anything that's coming up that's worth knowing for viewers? Yeah, what's your take on all that?
No, you know, I keep an eye on it. Obviously, we have the pulse on all of, the new tax laws coming out and things like that. And there's nothing that would really point out to the viewership that's been, significant
Right.
in the last year. They still just seem to be kind of stepping off and kind of waiting to see how things form, and they're very reluctant to kind of put a lot of these rules down. And really, when we spoke with the IRS during consensus in Austin, they were there, and we had to sit down with their new digital asset manager,
Hmm.
and he was just, really preaching consistency to us. He says, if you're going to do something one way, and you guys are going to start creating some of these standards for some of your clients, make sure that you're, recording them and you're being consistent. If you choose a model, you're staying consistent with it. So, consistency is key, at least with the IRS and what they've said. And then when we talk about, political, we have two big candidates here in the U.S., which are, Trump, of course, and RFK. that seem to be the most crypto friendly.
Right.
And we don't see, the Biden administration really banning anything in crypto or doing anything negative, but they just seem to be sitting on their hands at this time is what I see.
Yeah.
And that's kind of been like the last few administrations before. So it's like nothing's really changed. So we can't really, but it just seems like no one's really pushing forward. But recently at the Bitcoin conference in Nashville, you had Trump come out and
Mm.
support Bitcoin in a major way, and cryptocurrency as a whole. And he said that he would, have, put together a regulatory committee of smart individuals from the digital asset scene, if you will,
Yeah.
and start to create regulation around it. So he's vowed to do that as part of his campaign. And then we've seen RFK really come in and say that, like, he wouldn't tax Bitcoin, and he would, and it wouldn't tax as an asset. And he would classify it differently, and he would, really very forward-thinking things, extremely tax-friendly. He was talking about backing like the U.S. dollar, with
Yeah.
Bitcoin, or kind of trying to get back to some kind of gold standard
Right.
using a digital asset. So very interesting times in the U.S. We don't know
Yeah.
where it's going to go.
It's become a major topic. Like it's something
Yeah,
that's part of the election, like a big part of it now at this stage.
right.
Yeah.
Yeah, 100%. And they're making it, part of their campaign, and
Yeah.
made it a big thing. And it was all over the news here in the U.S., and you just can't get away from it. So
Right.
it's pretty amazing how far we've come in this space, and where we are in the cycle for digital assets, and very interesting. I mean, if we do vote in someone that's very pro crypto like that, we could see significant gains into next year. We could see the bull cycle could bring the biggest bull cycle we've ever had, in my opinion.
Yeah. Yeah, it would be interesting to see. I mean, 1 year ago, I wouldn't have imagined someone running for president talking about setting up a strategic Bitcoin reserve for the US. I mean, that was quite. I was quite surprised to hear that in his speech in Nashville.
Absolutely, and to have BlackRock and all these other people launching,
Right.
with digital assets and Ethereum and Bitcoin, it's phenomenal. And those
Yeah.
guys have global assets. So, and really, we're talking, yeah, it's a global asset class. I think it makes sense, and they're starting to see it. So, very interesting.
Right. So let's try and sum it up to some extent what to
Yes.
look out for in terms of taxes. We talked about a few things: tracking your activity, wallet hygiene. Do you want to have a go at kind of giving a big picture summary of what to look out for, and perhaps also where you guys can come in?
Yeah, I mean, the big picture summary is simply this: doing your taxes yourself. If I were to do my own, myself, I would have had big problems. I mean, we started
Yeah.
with that in the beginning. I would have owed $1,000,002. That would have hurt versus the 996. That gain, rather the loss I took,
Loss. Yeah.
against my future earnings. So, it's interesting. It's a good to put me out in front and basically say, like, this works, and it's not just for wealthy people, it's for everyone. And so I would definitely want to say, bring that into focus. I would definitely want to say that, just filing whatever you get from your exchanges is a no-no.
Mm.
You should really look to engage, someone that is doing digital asset reconciliation, or DAR as we call it. And that's really going to clean up your books. It's going to look at exactly what you have going on, and at the end of the day, you'll realize that you cut the best treatment possible, and you'll get the best tax benefit possible by going through and reconciling everything. Another thing is, through this process, getting on a platform, having the visibility going forward, understanding what your tax liabilities are before you sell something. Because you really have. That's what a lot of people don't see. It blindsides a lot of people. They make these
Mm.
huge gains, and they go, "Oh man, I just made all this money," and they realize, "Oh, I did it on a short-term gain. I should have waited a few more
Yeah,
weeks
yeah,
or something of that
yeah. Yeah,
nature." So you really got to, be, playing, looking at the taxes in a more meaningful way. We
yeah.
talked to the audience about taking a loss. Please, don't just hold these things all the time, and when they go down, sell them. And if you want to buy them back in at a different date, you're free to do so. So, but remember, you can bank those losses, and they're going to be choices that you make in coins that just don't go anywhere. And it's better to just, part ways with that and take the loss against future gains with your other coins. So really want to
Yeah.
highlight that. Uh, Cost-based modeling, another thing that we can do to really pull out. If you're just letting everything default to first in, first out, you're doing yourself a disservice. So don't do that. And make sure you can get with someone that can actually look at your cost-based modeling in a more meaningful way and really attribute things the exact way they should be to give the lowest taxable rate possible.
Right.
Yeah, and then
I
I
think.
would, like the last thing I'd say is wallet hygiene. For anybody running their business, this is the future. It's amazing once it's done. I mean, you won't believe how smoothly your business will run. From an accounting
Right.
standpoint, it's one of the last things you have to worry about versus one of the first things. So, I definitely that's kind of my roundup.
That's awesome. Yeah, lovely. I'll premise this again with, obviously this is no taxation advice. We said it at the beginning, but yeah, I think it's good to familiarize yourself with these topics that you mentioned. At the very least, do the wallet hygiene, do some tracking of your portfolio, try to reconcile perhaps yourself. But obviously, if you want to go for a more professional service and to optimize it, there's Count on Sheep, obviously, like you said. Yeah, I mean, it's been lovely to have you on the show. Perhaps if you want to also drop like how people can get in touch, and we can put it in the show notes as well.
For sure. Well, the big thing is we're Count on Sheep. We named it that funny name because I was losing sleep over my crypto taxes, and in the U.S. we say you count on sheep when you're trying to go to bed. So Count on Sheep is our name. It might be a silly name, but it's a serious business with former Big Four accountants on staff that would love to talk to you. Anybody that comes through you guys here at Teach Me DeFi are going to get 10% off first of all of your bill, and also a free consultation. So if you guys do want to talk to tax strategy with CPAs and big time accountants, we're glad to talk to you about it. Don't be afraid. Our prices are not even close to what we would do to save you money. So you're always winning with us. And you can go to our website. It's countonsheep.com, and you can go ahead and book a meeting with us. And make sure you mention you're from Teach Me DeFi. We'll take care of you.
Awesome, Nick. It's been a pleasure to have you on the show. Hope to see you in person sometime, perhaps at Oktoberfest. I think you mentioned it to me
Let's
on our
do it.
last.
I want to do it.
Awesome. Yeah, thank you for coming on the show, man.
Wonderful. Thank you so much for having me.